billion in 3 days. That's according to the latest reports from the Central Bank of Nigeria, although this is below the reserve received within the same period in November. With the current state of Nigeria's foreign reserve, the CBN, that's the apex bank, can conveniently fund 6 to 9 months of export credit depending on demand. That the foreign reserve will suffer a further decline after the Christmas and New Year holidays. Well, let's stay with the Central Bank of Nigeria. The Apex Bank has just revealed that bank's total assets in the third quarter of 2022 rose by 21.58% to 69.67 trillion naira. And according to the Deputy Governor, Financial System Stability, CBN, Mrs. Aisha Ahmed, Governor, Economic Policy Directorate, Dr. Kingsley Obiora, the bank's total asset rose with 5,670 trillion naira against the previous year of 57.30 naira. Also, the non-performing loans ratio declined to 4.8% in October 2022 from 4.9% in the previous month, staying below the regulatory benchmark of 5.0%. Now, Mrs. Ahmed adds that deposit increase from 36.13 trillion naira to 43.05 trillion naira over the same period was witnessed. And despite the unstable macroeconomic fundamentals that have characterized the 2022 business year, economic analysts have expressed optimism in the growth prospects of the Nigerian economy in the year 2023, which is just a few days away, stressing that its prospects are susceptible to global shocks and domestic imbalances. And speaking on Tuesday on TVC News' flagship business program, Business Nigeria, the director and co-founder of Budgets Nigeria, Mr. Shehu Onigbinde, pointed out that though short-term growth output is positive, inflation expectations remain unacceptably high. He however laments the failure of the fiscal authority to measure up to expectations in the complementing the monetary side to address macroeconomic challenges confronting Nigeria's economy.
I feel that lack of coordination between the CBN and the Ministry of Finance is one of the biggest woes that our economy faces. There is no reason why CBN is pumping so much money into the hands of the federal government beyond statutory limits that it should have not required some form of fiscal consolidation. Making Nigeria a proper investment destination is something we have to put forward, and that starts from us even fixing our political economy. The third thing is just about we need to look at the non-oil sector. It seems there's so much going on in the oil and gas sector, and unfortunately, this moment should have been our moment if we had made conscious and deliberate decisions over the years. And look at the Arab countries or the Gulf countries, they're making a killing. Since this whole Russia-Ukraine problem started, they have made over $300 billion in oil and gas revenues just because of the current prices in the market. Nigeria has not been able to scrap anything significant from all of that, according to the CBN government. So it's very important that if it looks like we are jinxed in our oil and gas environment, maybe we start looking elsewhere. How do we grow our non-oil export base? And maybe also think about gas. How do we stimulate investment for the gas infrastructure and also ensure that we build the key elements like power, like transport, like logistics in there? It's always about the economy and the economy and the economy. And if we put the economy in the right shape, if we are committed and courageous and ethical leaders for that, I'm sure we will have a way forward in a few years to come.
Well, let's turn to global markets now, as Asian equities were subdued today while the dollar held firm, with investors looking for direction after China took further steps towards reopening the COVID-battered economy. MSCI's Products Index of Asia-Pacific shares outside Japan slid at 0.313%, snapping a two-day winning streak and looking set to end the last month of the year in the red. Japan's Nikkei opened at 0.5% lower, while Australia's S&P index lost at 0.43%. China's stocks were set to open slightly lower, while the Hong Kong stock market opened at 1% higher, encouraged by China's announcement it would stop requiring inbound travelers to go into quarantine starting January 8, 2023. Banning the export of oil and crude oil products to countries that have imposed price caps. It is the long-awaited response to the selling of $60 per barrel applied by Western countries on Russian oil. Mr. Putin said the ban would come into effect from 1st February 2023 and lasts for 5 months, although the decree includes a clause that allows him to overrule it in special cases. European countries are already suffering from high energy prices due to the loss of a lot of Russian gas imports. It is not yet clear what impact this latest Russian decree will have on oil prices, but some analysts are suggesting it may prove to be largely symbolic in the international market. Let's wrap things off now with crude oil prices on the international market as it fell today on concerns that rising COVID-19 cases in China, the world's top oil importer, will disrupt its economic recovery as it unwinds its pandemic restrictions, limiting fuel demand growth. U.S. West Texas Intermediate crude experiences a price decline of 1.06% to sell at $78.69 per barrel. Brent crude futures also fell to sell at $83.33 per barrel, experiencing a downward price review of 1.19%. And Bonnie Light sells at $81.14 per barrel with a downward price margin of 0.02%. And for the OPEC basket, crude oil dealers are offering $81.14 per barrel with an uptick of 2.24%. And that's how we wrap things off here on the Business Days. But just to remind you again that we have breaking news for you, as the Red Chamber of the National Assembly has just approved and passed the 819.5 billion naira as the supplementary budget for Nigeria, and as well as the passage of the finance bill for the year 2022. We have more details for you, of course, at the top of the hour with Business Nigeria. Thanks for watching. Sports News is next. Good afternoon.